FY23, your revenue growth was nearly 40%. What has been the historical growth rate of popular vehicles?
Historically, we have been around 10% growth that CAGR that we are getting.
Okay.
But to answer your specific question as to what was the reason why we had a 40% growth rate in FY23, in fact, as we speak in H1 also, we have covered nearly about 58% of FY23's revenues. There are various factors. As Naveen was mentioning, it's the focus on acquisitions that we are doing on both organic and inorganic. Every year, nearly about 7 to 8 service centers, organic service centers we built. And on top of that, you have the inorganic growth. We have gone into the electrical space, Ather and Piaggio. Bharat-Benz has come into our fold, the Bharat-Benz dealership of Prabal Trucking. All these are factors which are building up growth, and that we will continue to grow as in the future too.
The historical growth rate of the company has been 10%, but the growth in the aftermarket services has been about 18-19%. Yeah. So double. Yeah. Are the margins also higher in services? And if yes, how would it compare with the overall average?
Absolutely. The entire EBITDA of the group of the organization, more than 57% of the EBITDA comes from our service operations.
So services is 14% of revenue, but 55% of your EBITDA.
Exactly. And in fact, to add to that, we also have another company which is distributing spares. There, another 7% of EBITDA comes from there. So to say, around 62 or 63% of our EBITDA is coming from not the vehicle sales, whereas vehicle sales contributes to the top line. And the bottom line, when you look at it, it's mainly the service and the spare parts which contributes to our EBITDA. And that is why you'll find that year on year, consistently, we have been improving the margins. So, I mean, as we say, whether it's the NAV per share, or if you look at the PBT...
John, I was looking at your EBITDA margins, for instance. In FY21, it was 6%, FY22, 5.1, FY23, 4.8, and in the first half of the year, it's 5.1. Yeah. So despite, the aftermarket services growth being much higher, it's not translated into higher margins.
FY21 is an outlier because of the COVID period. There were some cost benefits like rental waivers and some benefits, employee costs and those kind of things. So we leave out FY21. But if you go down, if you go down the PAT levels, we've been consistently growing up on these 3 years from a 1.1 to a 1.3, and right now we are at 1.4. More importantly, what we can look at is the return on the net worth. Okay. So return on net worth, last year we ended up with about 18%. And this year, for 6 months, it's nearly about 10%. 10% is the return on net worth that we have. So definitely this service pie of it is playing out in our total return on the capital employed.
Just add to that. So if you look at our FY22 PAT was about 34 crores.
34 crores.
FY23 is about 63 crores. Yes. This year, first half, we have already clocked 40 crores.
Okay, so your gross margins are between 15 and 16%, right? Consistently. Correct. What are the gross margins on the sale of new vehicles, and what are the gross margins on services?
Sales of new vehicles and pre-owned cars hovers around 8 to 9%. Okay. Whereas for services, that's where our focus and concentration on. It's nearly about more than 55% as a group.
And how has the contribution of services to your revenue gone up? It's currently at 14-15%. What was it 4 years back? And would you like to take it up to 20%? And if yes, by when?
Yeah. So if you look at services turnover, if I'm not, John can correct me on figures, is today at 750 crores, which is equivalent to about 15%. About 3 years back, it was about 400 odd crores. Okay. So that's why I said we've been clocking about 17-18% consistently in terms of service revenues as such, and also as a contribution towards total turnover. But that gets skewed a bit each year when premiumization of vehicles happen, and hence the average ticket price of the, but in terms of margins, will continuously grow.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions. On the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube.